The equity market
Thanks for having me.
on the A-share equity market feels a bit tired. What do you think, near-term direction?
I think we're sort of in a trading range for now, and it's seeking direction. Although in a way it's a good thing, because if it goes up very strongly, then it would have more reasons for particularly offshore investors to sell down and move on. Yeah, and I think global investors are always wary of a very fast bull turning into a bear, collapse.
Okay,
but I think
you're looking
in general,
at
we're not that worried.
getting into
I think
cyclicals,
it's just a
Wendy.
consolidation phase.
Right. Now, part of your thesis right now is start looking at cyclicals, and it's a recommendation, I have to say, that's been brought up by a lot of our guests when you look at China. Say, look at cyclicals. It's about time the economy is recovering. Is it broadly cyclicals? Is that top down, or is that still bottom up?
It's both top down and bottom up. So in our model portfolio, we turned more positive since early July. And right now we're overweight consumption and cyclicals. And within cyclicals, it's construction machinery, building materials, and gold and copper. So we're seeing positive demand driving revenue and margins, and in some cases gaining market share for construction machinery and building materials.
Wendy, it's Tom here in Beijing. When we last spoke to you in February, you were overweight internet stocks, tech stocks, education, automation. Are you taking any money out of those stocks now and adding those to the cyclicals that you just listed, or are you adding and keeping that tech position?
We trimmed a bit in internet, and we are out of the third-tier internet names, although admittedly there could be some privatization opportunities, but that's hard to call. And we allocated some of that money into cyclicals because the earnings and growth are going to be ahead of expectations. And some of the cyclical names come from very fragmented sectors that the leaders can consolidate market share and also do a little bit of an import substitution.
So is this largely then a focus on SOEs then? Do you try and avoid the small caps in the cyclical space?
That's a very good question. I think the provincial local SOEs often have equity incentives. And we found restricted shares and stock options tend to be quite useful for lifting returns to the shareholders. But what's been very difficult is to be very positive on central government SOEs. So we do have some small caps, mid caps. In cyclicals, it's very much bottom up.
And Wendy, to follow up on that, I'm looking at you. I noticed you guys did some studies here, backtesting part of that, I imagine, on the sort of investment strategy that worked during the GFC and separately during the trade war as well. And I guess to Tom's point, what did you guys find, large or small cap, and what does that tell you about how to invest right now?
Yeah, thank you for highlighting that. When we did the comparison on GFC and looked at how value, cyclical, and then growth performed, growth beat the other two by a mile. So people own Chinese equities for growth. So that's a pretty clear conclusion. And from the study of 22 months trading pattern since April 2018 during escalation of U.S.-China tension, then a truce, then a standoff, and etc. What we found is that the kind of stocks that can outperform tend to be mid-cap with very strong earnings trajectory, and they will go up independent of what the macro backdrop is. Other than that, the large cap tend to swing with the risk on and risk off. So during the risk on period, people will buy tech, semi, tech include hardware, software, and consumer discretionary. And then during the risk off, people will go for lower beta in staples, insurance, and some defensive, etc.
And Wendy, you highlighted the importance of a strong balance sheet there. We've been talking about liquidity conditions here in China, concerns from our own team at Bloomberg Economics that they need to be eased. Where are we, when you look at the liquidity conditions, where are we when it comes to the default cycle here in China?
I think the default cycle is still going up, and I think the difficulty in looking at the liquidity condition or the signals is that there's so many signals of interest rate, right? But judging at what the regulators have done so far this year is that they're making small but quick adjustment so that there's enough liquidity. Now, we think because of the default conditions, there could be kitchen sink quarters, yeah? And I think this is what investors are waiting to see during the interim results. There are also likely more consolidation, privatization, and restructuring opportunities. So we do see some strategic buyers stepping up as a result.